July 30th, it's 10:07 p.m. at the time of this recording. The Dow Jones finished at 1.19% today, S&P 500 1.66, Nasdaq 2.78, Nasdaq 100 3.36%, and the Russell 2000 1.37%. Let's get into what happened today with the Nasdaq. Looking here at the Nasdaq, we still do not have our institutional support, although overnight we are up here at 488, apparently 47 here, so I've marked it off here. And one thing here before I start is I want to tell people, try to take more than 5 minutes here to watch the video. I talk about a lot of information, talk about my unique kind of way of looking at the market. I try to combine three different things: the macro, the fundamental, technical analysis here. There's three different reasons, right? And sometimes from a technical perspective, a lot of traders miss this number one move here. So again, we do not have institutional support here, but we did have a bullish engulfing candle here, and time frames matter, right? So here on the 23-hour time frame here, I want to show you something here. So right, it's very important to check your different time frames here on TradingView, right? If you go here to regular hours, right, you see gaps here that don't exist, okay? Right, don't exist here, right? See how there's a candle here, right? So there's pre-market, there's market hours, and there's obviously aftermarkets, but then here on TradingView, during the week, you can have a 24-hour kind of viewpoint, so you can see all the candles. So sometimes all people see is one silly candle, right, up here. Well, it was down here. This is in the weekend, right? We didn't have a true gap up here. And one thing that I want to point out here is, right, is are we having the same thing that we had here? Okay, so I went ahead and measured the moves out here. How far can you move up here to your next level? And where's really your next point of control? Right here, you see big key levels here. Right here, right here, right here, right here. And a lot of people, they try to get involved in this war zone. What's a war zone? Right here. What's this war zone? Right here. So a lot of people get liquidated on a daily basis because they're not patient, right? Why not wait to a 50-50 level right here? Okay, you have lots of them. This isn't one here, right, because you don't have any previous, as I call it, track records, okay? So if you look here, previous track record, right, but then again, everybody gets wrecked. They think the world's ending here, and they do again and again and again. They get everybody, right? They get wrecked here, they get awaited, right? You can just mark the levels here, you would have found it, right? And then you go up. Obviously, this is liberation, right? But it's all the same stuff, right? Liberation here, and then, right, Iran war and all these other things, private credit issues here, and then, you know, memory issues here as well. And so again, when we look here at the Nasdaq, right, where's the really next good level here to get involved with? Right here, this just so happens to be your call wall here that you rejected here, and that would be my next target here to the upside. Your upper extension here is this next level here. So one way to kind of figure out, if you just delete your drawings here, is how far you can go up. What move have you had so far? So far, you've had a what? For you told here on TradingView, you've had from the lows a 5.51% move here, right? And then how much farther do you have to get to your call wall? 7% here. So again, just do the percentages, right? Up here, 8% here. So again, the number one mistake traders make here, right, is just look at a long position here. So you missed the move down here, right? Because everybody, right? I didn't know this was going to happen. I was surprised. And actually, let's talk about what actually drove the market up today, right? Samsung said memory will be tight until 2028. That is the whole reason, right? That entire sense, that's it. That's why we rose up, right? When you look at the charts here, what pushed up the Nasdaq today? All memory. SanDisk, SOXX, Corey, Lamron, Microsoft, Western Digital, AMAT, right? And we'll talk about it later in the video. That's why you want to watch the whole video, please. AMD right here. So that's what moved the market today. That's actually why we went up. Nothing else here. And I'll show you a stat that I found here online. So here, right, a lot of traders make this mistake, right? When you're talking about risk to reward, I mean, what's your risk here? Down here. So really not great. Where could you maybe retrace to? What was the percentage of the move down here? So maybe like you could have assumed, you could have, you know, maybe grabbed like a leap, not financial advice, of course, and maybe you could have assumed you were to come back here. So big pivot level here. We do have to, in my opinion, hold above 688. So that is my do or die level here. Again, I do expect some sort of retracement, but maybe we don't get it tomorrow. Tomorrow we do have expiring options here, so maybe see some profit taking here in the morning. So just be careful of options that literally are expiring tomorrow. And right here we see our next call wall. What can this form here? An evening star. What's an evening star? Looks sort of like this here, categorized by a bearish engulfing candle here. So you had a staircase down here, and that's what a bear market looks like. Very painful, very slow, very chopped, like a castle formation here. Everybody gets wrecked here, right? What did we call this? The war zone. Mark it out here. This is the war zone. Where did everybody get involved? The golden zone here, or we want to get involved in right at a key level. What's a key level? Here. How do I know? Because you have a lot of liquidity here, you have big movements here. So right here at this wall, you have a key level here. And again, free trading tool on TradingView. How far do you go from here? About 1.5%. How far are you away from there? 1.95%, and then to the upper extension here, 3.44. So that is your upper extension level here for your next weekly expected moves here. And again, right, if you're just doing calculating here, right, do this, and then what are you risking here? Where's your put wall? Mark it right here. That's where you bottomed out at, and that's where buyers stepped in here. So if you were to drop on an anchored volume profile, you can kind of see here. Let's just drop it on here where buyers stepped in at. Oh, that's anchored volume profile. But hold on here. Anchored volume profile. What? Hold on, I apologize. Okay, I guess I'm not gonna get it, whatever. So, right, you had buyers stepping here. This is your value area low here, right? Like your flush zone, you break it, right? You're gonna flush, right? Where was your value area low here? Right at your put wall, which is right here, close to 700. And again, you can see this is a key level. That's why it's a key level. Again, you can kind of see right here before you even put on the anchor volume profile, we mark this off. This is your put wall here. This is where buyers stepped in here, right? Right, and where's all the concentration at? Right here at this, within the 700 range, all the way up to this next key level up here. So let's just mark that. We already did. Now obviously, where's your value area high? It's up here. So you have value area high, VAH. You have volume area low. You have your point of control. What's your point of control? It's this white line here on the anchored volume profile. Your point of control is right here. This yellow line that's marked. Actually, it's marked. Excuse me. Your point of control is right here at 691 right here. It's marked by this white line. So your point of control is right here. Again, very, very key liquid zone here. In a big pivot. So I think I made a mistake here actually, and I apologize. So right here you have a key level here, and you have a key level here. So I did miss that here. So again, I've been running on like almost no sleep, but that's one mistake that traders might make. I'm thinking right up here to 700, right? I look back at the chart after dropping an anchored volume profile, just glancing at my point of control. I'm like, oh, your point of control is here. I look to see why. Oh wait, right? But then I also know why I was looking at this level here as well. So again, in hindsight, right? Always take your time to make sure you're looking at the chart correctly. That's the difference of you making and or losing money, and then getting involved in a war zone here, right? Where we really don't know where we could have gone. We could have gone all the way down here, but we stopped up here. We completed our cup close, right? We had a bullish engulfing candle here, Morningstar, massive reversal, right? If you go to different time frames, you're gonna see different things here, of course. And again, these are our next upper extension levels here. Where can we retrace to? Let's go ahead and again, drop that level from here, where you dropped, to here. Maybe right around like 680, that's where you could possibly retrace to. So mark that level here. Going over here to the Nasdaq, right? We can see where we broke out from. This looks like a stop loss hunt. So sometimes you have that within like flags of liquidity, whatever flags are just building liquidity. Sort of think about it like this, right? So you're chopping, but think about that like on smaller time frames, and sometimes even larger time frames, right? Again, daily, right? 2 hour is smaller than that. And what can that look like, right? You have rising threes here, and then you also have falling threes. That's a falling three here. This is rising, rise up, trap, drop down, right? Falling three, drop down, 3 candles. Doesn't always have to be 3. Rip up here, stop loss hunt, make people think that you're gonna, drop all the way down. And they can come in all forms and different shapes and sizes. Looking here at the Nasdaq, here are a couple examples. Falling wedge, you broke up, right? You did have a wick here. I'm just gonna clean this chart off here real quick, right? Broke up, broke down, right? And then obviously you broke down again, right? Falling wedge, created an inverse head and shoulders, bull flag, rip up here, okay? And then where did you finally break out? Right here, created a bull flag, and so forth. Also, you have a bull flag right here. Going over here to the futures here, looks like we're obviously up overnight. How much? Holy crap, 72 basis points. So again, what I felt like we had today was a short squeeze. So right, the setup was chips were crowded trade. They dumped 10% in 3 sessions. Traders piled in shorts. What happened? People got liquidated. Oh, the world's ending, right? And then they trapped the herd, right? That's how markets make money, right? You see it here on the chart. World's ending here, rip up here. They did it to you during COVID. They did it to you during Liberation Day, right? There's always a reason why, okay? And so right here, obviously, again, we have our bullish engulfing candle. We have our put wall. I want to wait for a third candle here. What does a third candle look like, right? We had a massive move up. After we have massive moves up, 1, 2, 3, you can, of course, have another bullish engulfing candle, creating out 3 right soldiers. It's a chart pattern here. I've shown you here in my other videos. Make sure to like and subscribe to the video. It really does help me out. And again, why a third candle here? I feel like after a big move here, sometimes you really do chop here. So you can kind of see that, right? Big move, right? Dragonfly doji. But I mean, from this day here, you opened up at 24188. Your high was 2462. Your low was 2173, and you closed here at only 300 points above higher. And then what was the next day here? So the high of the day was 642. You closed at 481. So high of the day was 642. You closed lower here, right? So then you created a bull flag. Then you broke up here, right? Well, my point is, right, sometimes people want to rush into the trade. They're late. They want to rush into this trade. Oh, I'm late to shorts, right? I'm late to longs here, right? Then sometimes you do stop loss hunts like what? Like this, okay? And the number one mistake that traders make here, right, like I mentioned it earlier in the video, time frames matter, right? This is the daily here. You can kind of see. All you see is one green candle, right? But if you switch to 24 hours, you see the full picture. Again, we have a bullish engulfing candle. It's not really just here. It's sort of down here. And we did have a 55 EMA institutional close. So very, very, very bullish. Obviously, the Nasdaq is leading the indices here due to technology, Micron, and everything else because of one headline. But that is one thing that is very bullish and very encouraging to see if you're a bull. We do have our rate of change here flipping positive here, which is also a really good sign here. So when you see rate of change flip here, right, you typically go up here, okay? And you can also mark bottoms here as well. It doesn't always, no indicator tool is perfect, right? That's why it's perfect to have an arsenal of many. And the lines here that decided for me, right, these are not opinions, right? Price either holds them or it doesn't. So the Nasdaq does need to hold 24,932, right? Held today. It was just structural and driven on a headline, right? If it loses it today, right, it was just a cover. S&P, SPX here, 7410 market. That's the floor. Below it is bullish, bearish because the engulfing candle gets erased. And then obviously the Dow needs to, it's under Monday's close. So the recovery for the Dow is still unfinished, right? Are we going to see a rotation out of the Dow back into the indices and tech now that people are bullish again? Going over here to the SOXX, right? We did have we're still under, again, the 55 EMA, but we do see that rate of change currently up here. RSI is picking back up here. I would like to see it break above 50 here, which is sort of neutral, what people call it. We did kind of bottom out here at 32, which is technically an oversold level here. Again, if you switch time frames here to a smaller time frame, what are you going to see? Completely different chart pattern here. Remember I told you about stop loss hunts? You come up here, curl up, drop down, bull flag, liquidity. You can call it any triangle. It can be whatever you want to be. Gap up here. Here are your upper extensions all the way up here. Wall right here is technically you're above your wall, so you might come back down here and trace 509, which makes sense. But you have your next walls up here, 524, and then your upper extension right here is 538 for the SOXX. Going over here to Apple earnings, what happened? So basically what they got it for next quarter, the total revenue growth for next quarter, they got it for plus 9 to 11%. This quarter was only 16%, so they got it down. Their gross margin was 47 to 48%. Next quarter they got it for 47% to 48%. This quarter it was 50%. iPhone growth was basically the mid-teens for next quarter, and then this quarter was 22%, and then obviously growth, really no growth at all, and then obviously currency to hit growth, negative 2.5 points, and right this quarter it was sequential, which is bearish, right? That's not growth. Basically what happened on the conference call was Preeth basically said more than 100% of the margin drop this quarter was memory costs. So supply constraints will increase significantly on iPhone, Mac, and iPads. Cook framed it as basically demand forecasting missed, not a supplier failure. The detailed basically nobody headline was services posted its first sequential decline since 2022, bearish, 30.98 billion down to 30.74 billion. Stripped the tariff refunds away and the margin was only the mid-range on the old guide, not bullish. Basically, they did have a record quarter, but why is the stock down 8%? They beat on revenue and grew 16%, but 3 things that buried it was services missed, the one that matters, 30-point right where we just mentioned. The guidance is what killed it. Weak forecast, what we mentioned above as well. The memory shortage also forced Mac and iPad to increase their prices. And then runaway, right, gets shorter from here. Next quarter is modeled near 12% growth, then single digits after, and then also China disappointing too. It only went up 23% on the year. This is the same lesson as every other print this week. This quarter was never the trade. The forward guide was, right? That's why it's important to understand how to trade earnings. Their earnings right here, total revenue was 109 billion. They were expected at 108.65. So in my opinion, barely beat. I mean, that's not a lot. Let's not act like it's a bunch. That's why I don't have free cash flow, right? Earnings per share came in at 2.02, expected at 1.89, really not comparable. Gross margins were 50%, really not comparable as well for those tariff issues. And they expected 47.9%. iPhones up 20%. Macs were up, the Mac sales were 10.35 billion, expected at 8.75. So that was a big beat, obviously. But I mean, that's what they sell. Services, right? The high margin line came in at $30.74 billion, below 31.22 billion, which was expected. So that was a miss. iPad came in a miss, and so did going over here to Amazon. So Amazon is up here currently at 260 after hours. Why? What happened on the conference call? Basically, Jazzy said what? Next quarter sales, right? The number was 197 to 202 billion versus expectations. They wanted it below $204.1 billion. The next quarter profit is expected at 22.5 billion to 26. The straddle was 24.9 expected. The 2026 spending plan was 220 billion for capex, and it's raised from 200 billion. So they're trying to justify their growth with spending more, I guess. And the AWS signed, they didn't deliver. So basically, they came in at $496 billion, and it was expected to be $364 billion in quarter one. And basically, I think why the market forgave the soft guide was the $496 billion backlog jumped. And one of the problems I have here with the chart here is, right, backlog. So we're going to go up to also what helped push the market up today, Microsoft. And we're going to go to a different chart here as well, SMCI. Okay, the problem with SMCI is it's a promise, right? It's a promise. It's an IOU. If you guys see the movie Dumb and Dumber, that's what's kind of going on here. They're making all these false promises, all this, backlog stuff, etc., right? Here are their earnings, what they did for revenue, net sales, AWS services, advertising, operating profit. Note the Baker sales, international, earnings per share reported, which was versus what was expected here. And again, we also have the SK Hynix trap, right? The SK Hynix trap again, right? That 5.75, right, also includes the $53.4 billion worth of gains, mostly from what? Their Anthropic state. The real number is actually 27.5 billion operating profit. Read that line again, not APS. So, right, what does that say? Mostly from their Anthropic state. Interesting. Okay. Coming over here to oil, really no differences and changes. I guess Saudi Arabia is proposing, no different from how we keep talking about all these deals, all the things that keep not happening, right? They proposed naval coalition to protect ships, so I guess oil falls on basically Saudi Arabia proposing an idea, right? Proposing a backlog, right? False. Okay. So anyways, we have not really a big drop here in crude oil. This is still a concern, still a problem. Nothing's changed here. So this is still one of the charts you're going to watch. People are going to forget about. Maybe you have a falling three here, bearish pattern. But again, right, this is a type of this is more of a macro play here. Right, at any point in time, right, Iran can do something, Ukraine can do something, right, that we talked about in our last video, that can cause an issue with what? The market. Going over here to IGV, right, so we see some winners and losers, and that's what we're going to see here in the market. Have a so going over here to IGV here, why does software keep getting sold, right? You have winners and losers. In my opinion, that's all what's going to happen here. So basically what is seat-based pricing means, right, is business software, right, costs roughly about $40 per month per employee, right? You have 10,000 workers, you have 10,000 payments. Well, if AI can do the work, if AI does 3 people's work, right, the customer needs fewer what? Seats, and the vendor gets paid less, okay? So the trade being made is, right, risk over results, right? Nobody has proven it yet, right? The market is pricing it in before it shows the numbers, right? These aren't falling on bad earnings, they're falling on what's possibly next, right? Taking a look here at these charts here, so what sold off today, right? Salesforce, Workday, and Adobe, and there's a few more stocks here, but this is sort of put out here as well. You have Now over here. Let's go ahead and mark it. Now they're going to look at levels here for these charts. These are stocks I don't want to get involved with, right? And again, for the same reason I showed you the other day, right? Adobe, same thing here, right? triple top up here, double top, head and shoulders, right? They trap you down, and then you're back holding for several years. Same thing with Salesforce, same thing with Workday. Here was at 300 once upon a time, and same thing with Work Now. Once at 240, now it's down here at 110, okay? And again, coming back here to Microsoft, the problem is, right, they haven't been paid. So everyone's celebrating when they haven't been paid, right? That's called what? Fronting. What do I mean by that? So again, the problem here in the market here, right, in my opinion is, here is that basically what literally moved the market. It was just the SOXX. So this is SOXX, excuse me. In particular, it was these stocks here. So I put together a sheet here to see like how much it actually moved the index here. Okay, so what like actual move was it? What actual move, right, were they responsible for, right? So right, Sandus had a 25% move right here. And one thing to understand, right, why some stocks are moving up and down, right? So to understand the entire AI trade, right, a lot of people are trying to big brain this, and that's what they need to do. It just needs to be simplified, right? So you have chips. Who makes the chips, right? How do you get the chips, right? So there's a lot of different places here that you can utilize, right? So you have layer one here. You have the tools, right? Like AMAT here. Here's an example, right? They are the tool makers here, right? That build the chips. AMAT, right? Materials, right? Was up 15% today. They sell the equipment inside the chips factory, deposition, the etch and IA implementation, inspection, the broadcast tool list in the industry, they have the broadest tool set, in the industry. They don't make a single chip, right? They sell the machines to whoever does, right? So that's layer one, right? What's layer two? And then you have another one here over here, Lamron, right? The tool makers, right? Again, they build the machines that build chips, right? So Lamron Research was up 80% today, also on, I guess, sketchy good earnings. It's the same layer, right? But it's a narrower focus. They etch and then do deposition. And they're also unusually levered to memory specifically. That's why Lam moves harder than applied memory on news. And basically, a bigger share of its revenue depends on NAND and DRAM, fabs expanding. Basically, these two get paid when chip factories add capacity. They don't care which memory company wins the market, right? They share the fight. So basically, they sell the picks to everybody who might be losing every day, right? So Micron goes down, right? They're still gonna have to make this maybe for Western Digital, SanDisk, etc., right? You have obviously layer two here. What is it? The chip makers, the actual silicon. So Western Digital up 16% today. Hard drives, mass, cheap, bulk storage. It's not glamorous, right? And it's also where the AI trade data actually lives, because nobody stores, right, petabytes on flash. So basically, these three things get paid when there's not enough supply, right? Samsung just warned, right, the headline to why we, I guess, gapped up today, that we're gonna have a shortage here into 2028. We have another layer two here, the chip makers again, right? SanDisk, right? NAND flash drive, solid state storage. Spun out of Western Digital, so basically it's just a pure flash play now. We have Micron here as well, the biggest name probably here that's moving the market. Actually, it moved up the market 253 basis points today, specifically on the Nasdaq, which is a big deal. So basically, right, DRAM and NAND. DRAM is the working memory. HBM, right, the high bandwidth version, sits directly behind AI accelerators. Right, this is the tightest, highest margin corner of the whole market right now. We have layer 3 as well, the compute landlords. Nivea's here, up 27% today. And NeoCloud, they buy GPUs and memory, build data centers, and rent that compute out by the hour. They own no models, they write no apps. They're the landlord, right, basically of the AI build-out. They get paid when demand for compute goes up. Another look here at the Nasdaq here, the level that we really want to watch here is the 7,410 level. We don't want to break that, but obviously we understand what, we can have some retracement, like what. Okay. Another thing that I think we need to talk about today, right? Basically, the economy got worse, but stocks ripped anyway. The Nasdaq obviously finished up on its best day since June, but here's what actually did it right. All the macro is bad. We have slower growth, a 19-year yield, 19-year high yields, and with the Fed members who basically want to vote for a hike. Only the catalyst was really Samsung and also Microsoft, right? One earnings report proved AI spending is coming back as real revenue, which is bullshit. Again, they don't have money in their pockets. They're fronting checks they can't cash. That's weird, right? Why was that enough? 6 straight down days were priced on one fear. Big tech is about to stop buying chips, but basically Microsoft disproved it, right, with their earnings call and also their guidance. So basically the selling rate had no reason left to sell. A fear got disproven. Nothing about the economy improved though. Big thing you want to take away from here, okay? So they ended the panic here with a revenue. They had the best day since 2008, roughly $555 billion in market value added in one session here, and they raised their capex here as well. Okay. They also didn't hike here. 3 of them wanted to. Rates held at 3.50% to 3.75. That's not neutral. That reads the sense. 3 for a hike. Hamak, Kashari, Logan all voted to raise rates. Horsch was a move, said the cooler inflation print barely factored into the decision to hold. And basically why traders care. The Fed sets what it costs to borrow money nationwide. Cheap money lifts stocks. Nobody in that room is talking about cuts. If anything, the next move is up. Nobody's coming to rescue the market with a rate cut. The inflation drop was borrowed, not earned. So June's PCE, the Fed's preferred gauge, came in cooler. Look at why. Headline was 3.7%, down from 4.17%. Monthly reading fell 0.1%. The core came in at 3.3%. Food and gas stripped out. Monthly was over 0.1%, under the 0.2% expected. How convenient. The catch was the drop came from cheaper energy on a brief Iran ceasefire, not from the economy actually healing. Targets 2%, and we're basically nearly double it. And the ceasefire can reverse any day. Right, the numbers look better, but it's not. Again, nothing's changed in the market. The 30-year hits its highest since 2007. The 30-year yield here that we talked about yesterday in the video. Again, I encourage you to watch all the videos. They all connect to each other. Came in at 5.24%. The multi-decade high hit on the same day. Stocks rallied nearly 3%. Got some divergence going there, I guess. The Q2 GDP came in at 1.5%, down from 2.1, short of the 2.1 to 2.3% expected. So growth is slowing, but the market didn't care. Why a bond yield matters to a stock trader. It sets the floor under every mortgage, car loan, and business loan in the country, and it's a risk-free alternative at 5.2%. Stocks have to work harder to be worth it. Stocks up and yields up is backwards. One of them is wrong. NVIDIA moved basically 3%, Micro moved 8%, leaders went up 13.26%. We already talked about those numbers. Why the laggards led, positioning, nobody was heavily short NVIDIA. The most shorted names moved the most. This wasn't a repricing, it was a buyback. Sell low, buy low, sell high. And basically, what is a short squeeze? If you only learn one thing from, what is a short squeeze actually? If you learn one thing from today's tape, learn this. Setup was negative 10%. Chips were crowded. Oh, I think we talked about that. We moved so violently though because all that buying lands at once. The seller's already sold. There's no supply left. Price gaps up and never fills. Fast, violent, and there's always hold. The difference between this gets better and everybody had to buy. Everybody had to buy. It wasn't this is getting better here. And again, it was driven by one headline. Memory ran its hardest, different story entirely. Micron up again, all these things. SK Hynix posted record numbers, but missed on details. The whole group got sold. Then Thursday, all of a sudden, Samsung, right, saved the day with a fake headline. They posted record profit and warned the shortage runs into 2028. How convenient. Always something, right, to gap up the market when we're falling. Why a shortage is bullish. Memory chips are obviously the entire market. That's why. I don't have to read that. That's why. Software split in half today, right? You had Oracle up 8.3%, right? Expanded into Google deal. Gemini goes into Fusion appliances, applications, and NetSuite. And basically, right, Seat, SaaS, Workday Now, CRM, Adobe leaked while chips ripped. No bad news required. They sold off. You have shovels, and then you have the seats. Paid when AI usage rises or paid per employee AI replaces that we talked about earlier, right? Do I want to use AI to replace all these different employees that might be taking all this time on Adobe? Probably, okay? And obviously, again, across the board, green across the board as in breadth, every index closed up. Only one of them actually ran. Nasdaq up 3.3%, cleared the entire week's range and snapped the 6-day losing streak. The Dow up 1.19%, closed above, but it's still not quite above Mondays. So the spread that tells you the story was the 217 basis points. Broad rallies closed that gap. This one didn't come even close to it. Trim repair, participation didn't. And we talked about those levels. What I think going to tomorrow is, again, the levels that I want to watch here. I'm going to be careful. I probably won't even trade tomorrow, to be candid, right? We had a really good week here on the Discord. I encourage you to check out our channel. Attend my next live stream and see what happens. I think you'll find that you enjoy the commentary. I think we have a really good community. And I think you feel welcome up. I think I'm talking. I think you'll feel welcome at home. Wow. Levels that I want to watch for tomorrow, like I said, overnight, obviously here. And one thing that I want to do here when we get to open, I want to mark our low of the night, pre-market low, mid pre-market, high pre-market, and then I want to mark our opening price here. So tomorrow, mark these levels, pre-market high, the mid level of the pre-market here, pre-market low, okay, and then your opening price. That's the best way to prepare for tomorrow, right? You don't have to trade every day. It's okay to take a day off. The market's going nowhere, clearly, right? And again, this is why a lot of traders aren't able to trade tomorrow. A lot of people lost their accounts. Obviously, we had a billionaire here that got liquidated by Citadel. So again, even the people that have a lot of money, people make fun of small people losing thousands of dollars. This dude lost 45 billion. That's got to be like one of the biggest Wall Street bet losers of all time. Hall of Fame. We were on fire today, undefeated. We called out 680 puts here. They printed. You can see that here. We did 680 calls here as well, reading structure to the T, even though we were observing some bearish patterns here. We also grabbed 683 calls here with no stop loss. Let's see how these did. Let's see how these did here. Excellent. Perfect. 41% there. But then we took 680 puts here for reference here. 680 puts here. We took 10 contracts here of 680 puts here with that one call, one runner left here. And bingo. Just in a few minutes, right, printing here. Obviously, we're up here. We came back down here, reading structure of the T. Then we took 682 calls. We went on a Ferrari today. So we grabbed 682 calls right here. We had a couple runners here from puts. Okay. We grabbed 25 calls of the 682s. Posted it here, timestamped. And then, of course, right up here. Then we also saw a cup and handle here at 1221 here. Still have the 682 calls here. Up 1,000 here. And then we obviously took some 682 calls and we held them here. We had a price target here with the maximum extension here at 683 here. Let me show you what I told my private members today. I posted this here. I said do what you will with this chart. I wanted to focus on my premium members today and get back a little bit more. So here on premium, we went ahead and called out here. And again, the specific targets, 683.54. That's what I was targeting. Doing night, bud. Somebody tagged the kid, man. My man Miggy's, where you at, bud? Yo, anyways, let them know we're in 7430 calls here. They should print here. Step 1, called it out here to the Discord, my premium. Step 2, alerted them here. Show them my positions. Put my money where my mouth was. 682 calls, right? You can see that here. Charting, right? Fact check myself. I did some steps here, right? I inverted my chart. I needed to find a ascending triangle here. And we also had a cup and handle. 7450 is within the range, perhaps a 2 p.m. move here. Okay. And then what happened? 683, full price target extension. Hit right through the doing night, bud. Somebody tagged the kid here. And we had a really good day here in the Discord. Went here and notified the members of what they missed out on. 6,000 here, 800 here, 3,000 here. Puts didn't matter. Then we have that one call here for the morning hedging here. Bang. Use code HBT here for options funding to get 80% off of your next account here. And join the Discord if you're interested in learning, interested in actually changing your structure and strategy. I want to teach you skill set for life. What I require you is to put in the work, bleed it with me, stay up with me. How did members do today here taking my callouts here? Let's go ahead and check. Microsoft, good job. We took those 700 calls and 7320 calls. Some people use QQQ and SPX instead of QQQ. That's fine. He made 1,000 here. Good job, dude. He made 657 here. This guy made quite a bit of money here. He made 500 bucks here. He made 25 bucks here. Scalping, 203 bucks here. Don made about $70 here. Moshi made more money here scalping. Hunky made some more money. Kadoken made 835. Dustin made some big gains. Damn, 5,000%, bud. J Bob here, member of the week again here, made $6,000 here on this call out with me. The 680 puts here as well. Maximum made 580 bucks here. Ronan made 30% on that. Alan again making some calls, money on some of these calls here. Brass Nichols here had a really good morning with me. This is only 10:41 a.m. Starting to look like a payout feed here again. 552 right there, profits. Brass making more money. Chris making more money. Really good job here. I really want to point out this member here. The market's really blessed me today with my long-term portfolio.
I'm crying. Literally, my conviction paid off after all these nights and days trying to learn and looking at charts. I'm so happy, and this is finally a great confidence booster. I'm still learning, and there's no way I'm feeling overconfident. Always going to leave some money on the table and book partial profits. Lessons learned from previous sessions and mistakes here. Hoping we all grow together. One of my students here, good job. This individual a few months ago, wasn't doing great. We had to have a lot of tough conversations here, but I'm really happy that he took responsibility, owned it, and what you put in is what you get out here. That I feel like is sometimes when I'm frustrated, the reason why I continue to show up here for people like that. Slater here made good gains here. Chris here made really good gains here, $1,402. It's cool, man, but like seeing this, right, like that really kind of keeps me driving here. Don made some more money on those calls that I called out. Trader D made some more money on those calls. Triple three whatever made $760 here. R1 Snipes here made more money on his new account here. Trader D made more money here. Tris made more money. Anchor made more money. Crispy made more money. Steady gains, baby. Void, more money. Mextread, more money. Ronin, more money. Tris made more money. Good job on coming back today, Tris, after I know you didn't have the best day yesterday, but glad you were able to lock in and get your money back here. Dustin made some more money today. Ash looks like she did well on her eval. Brass Knuckle shouting me out. Thank you. Appreciate it. He asked me, should I stop trading? Not financial advice. I said, well, if you made your money, your goals, like, of course. J Bob, again, just killing it every single day. Roshan again, previous member of the month. 580 here. More money here. Again, just there's a lot of gains here, guys. Just come verify for yourself. Joel made too many gains here. Here. Okay. Tris, this guy, passed a funded account here. Good job for you, dude. This guy, good job. This guy, good job. So, Sweets, good job.